I've wondered about for years, which is your tie. You always seem to wear a purple tie, and every time I think I've seen you, you've worn a purple tie, and I'm wondering if there's significance to that?
Well, at the beginning, the only significance was that I like purple ties.
Okay.
But I will say, so then the next press conference, I reach for a blue tie or a red tie, and I go, maybe not, And so I wind up wearing purple ties. And then it becomes a thing, and now I definitely wear purple ties all the time.
Okay.
But I felt like, it just felt a little awkward to be wearing one that was identified. We are strictly non-political. I can't stress that enough. We are not, it's not that we're bipartisan. We are non-political. We don't do that. And so purple is a good color for that. That's all.
Chairman, they're troubled and they're nervous. One business owner told me, if there's a hint of a recession, we're cooked. And he asked me to share that with you. What's your response?
So I guess I would say, let's start with the fact that the incoming data right through this morning's employment report, which admittedly is from roughly a month ago, the week of March 12th, they took the data in. It still shows us a solid economy. Unemployment's still low. I understand the uncertainty that's weighing on people. You ask about a recession. We don't make a probability forecast of how likely it is for there to be a recession, but many outside forecasters do, and many of them have raised the likelihood, albeit from very low levels. It's not something that anybody now is forecasting, or some people are starting to. And so there's not much more I can say about that. I realize that the uncertainty is high, and what we've learned is that the tariffs are higher than anticipated, higher than almost all forecasters predicted. We still don't know where that comes to rest, though, and we're just going to have to see that through.
I have one other Milwaukee question that I overlooked here, but in Milwaukee and other parts of the country, the housing market is out of whack. In our market alone, in southeastern Wisconsin, there's 5,000. The market's out of whack by like 5,000 houses that need to be on the market for it to have equilibrium. And a report this week said tariffs could tack on some $6,000 to the cost of building a new home. How long are people going to sit on their cheap mortgages from COVID? Thank you very much. And before they move on, before the market frees up.
So you have several things there. The first is we just haven't built enough housing, and we haven't kept up with the demand for housing. So there's an underlying shortage. Before the pandemic, there was a real housing shortage. And by the way, that's happening in many comparable democracies around the world. The second thing is, lock-in, as you say. There were very, very low mortgage rates during COVID, and people are kind of locked in. It would be very expensive to move, and that'll of course wear off over time. You also mentioned, the costs of materials that might be imported, lumber and nails and things like that. And yeah, that and also labor, a lot of labor from in the home building business has been traditionally immigrant labor. So yeah, the sort of new build market may face some cost pressures as well. That may very well be the case. That's what we're hearing from home builders, for example, both on the labor side and on the materials side. But even once these short-term things happen, we're still going to have not enough houses. And so it's all, I think for a long time, we're still going to see upward pressure on housing prices, maybe until population growth slows or until we catch up.
Private equity deal, and they're just stuck in their garage right now. How long do you think, what do you think the impact of the uncertainty these days will have on the private equity deals?
So again, we're hearing a lot of that. People are just kind of waiting for clarity. So, and I can't tell you when that will pass, but ultimately it will pass. We know that at a certain point we'll know enough to know what the uncertainty will decline, and we'll be able to see with real clarity what the policies are and what their effects are. So, you're right. We hear the same thing from businesses and from people that they're kind of waiting and seeing. There's a lot of waiting and seeing going on, including by us, and that just seems like the right thing to do at a time of elevated uncertainty. For a while, we didn't know what was coming on April 2. Now we know what came on April 2. We don't know. There's a lot more to be said about how all that shakes out. But that's we've come through that, and I think you now know that the tariffs are larger than people were generally expecting. That much you know now at this point. And you'll know more as you start to see the effects on the economy. So, as the months go by, it's hard to say exactly when you'll know. But, clearly that learning process is ongoing. We're just seeing that these are new policies, not just the tariff policies, but the other ones as well. There'll be, important fiscal legislation coming up fairly soon. And there'll be regulatory changes, significant regulatory changes. You have to really look at all of that to see what the overall effect will be. So I can't give you a date, but all of that is now kind of coming into place at sort of the speed you would expect policy changes to be, and then we'll begin to see the real economic effects as the year goes on. But again, I can't give you a really specific date. So it's a good time to take a step back and let things clarify. That's why it's just too soon to say what the appropriate monetary policy response will be to these new policies. It is just too soon to say. We can't say with any confidence today. So that's what we're doing. We've taken a step back, and we're watching to see what the policies turn out to be and the ways in which they will affect the economy, and then we'll be able to act. Fortunately, our policy stance is in a good place for us to do that. We're probably moderately restrictive, let's say. So it's not really tight policy, but it's which is appropriate since inflation is a bit above target. So we think we're well positioned to address whatever may come. And in the meantime, I'd say we're waiting for greater clarity before we consider adjustments. They are unhappy about the economy. That seems to largely reflect the increase in the price level that happened when inflation was high, 2021, 22, and 23 largely. Inflation is now back down to much more normal levels. Unemployment is low. The economy has been growing, but people are still experiencing that high price level. In other words, prices don't go down. They know they're paying much more for the basic necessities of life, and they're right that they are, and they're not happy about it, and they're right not to be happy about it. So I think that accounts for the negative sentiment. We're looking at inflation, which is the change in prices, and we're seeing that has come down quite a bit, and that unemployment is actually low. It's sort of very close to measures of maximum employment, and the economy's growing. So all those statistics are good, but the price increases of the past few years are weighing on people's budgets. And we always keep a focus on the people that we serve, and we know and are very conscious daily that the things that we do have a real effect on people's lives. We know that, and it really does focus the mind. And I think if you talk to people at the Fed, there's a very strong commitment to serving the public as well as we possibly can. Economic events are just very, very unpredictable at times, and there are shocks that you can't see coming. But nonetheless, our job is to, whatever happens, use our tools to bring the economy back to stability, back to price stability, back to maximum employment. And that's what we do. But you're right. We try to keep everybody in the room with us when we're thinking about what to do.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And we got Jerome in the house, and he said exactly what we thought he was going to say. They're going to wait and be data dependent. And he's asked about his purple tie. That's right, guys. He's asked about that purple tie. And of course, he's not going to give us the truth. But purple means nobility, but then also it lets you know the hierarchy in the room. And remember, the Crypto Teacher told you, the Fed is the boss. And then, of course, guys, we had that 10-year yield drop below 3%. That repo came back a little lower, and we saw that 10-year back over 4%. And we have Jerome Powell asked about a recession. If there's a hint of a recession, we're cooked. And what does Jerome Powell says? The economy is doing well, which we know. That is not the truth. The consumer is hurting. Credit card debt at an all-time high. Delinquencies at an all-time high. But guess what? The economy is doing well. I hope you don't believe that. And then he's asked about the housing market, and he says there's not enough housing. Guys, we know that is definitely not correct. Everywhere I turn, there's housing available, but unfortunately, the younger generation just can't afford it. And who caused the housing crisis? That's right, the Fed. And remember, the crypto teacher told you. And when it comes to opening a business, no one wants to make a move when the economy is uncertain unless you know the plan. And of course, these big corporations are willing and dealing because they know all about the digital economy, but we know that small business person has no clue. And that means they don't stand a chance. And remember, the crypto teacher told you. And we have Jerome Powell speaks about tariffs. Not going to make a move just yet until he sees how the tariffs affect the economy. And this is the reason why I tell you every single day the Fed wants to keep rates high for longer to destroy this legacy market so Trump can build this fourth industrial revolution. We clearly see the puzzle coming together. And we have consumers unhappy with the economy. And then he says that employment is good. And we know that people are working 2 and 3 jobs or can't even find a job because the labor market is so tight. Remember, all the layoffs we've been seeing are the good paying jobs. 60,000 to over 100,000. Those are the people they let go. And then on top of it, they have 401ks, pensions, the expensive cars, the expensive housing. And that's what's going to crush this economy because those are the people that are losing the jobs. And remember, the crypto teacher told you. Now we have higher tariffs, of course, are going to cause higher inflation. You heard that right out of Jerome Powell's mouth. So inflation is not going to be the reason why they cut rates. What's going to be the reason is the labor market. And I've said that time and time again, because once they let all these people go, they bring in the machines. The big corporations don't take a hit because the machines take over the economy. And then, of course, universal basic income will keep the sheep quiet. Remember, we've already seen the simulation done during the C word. Only thing you have to do is give them that free money, and they'll sit at home and be quiet. And remember, the crypto teacher told you. But before we get there, of course, we're going to have the trade war, the currency war. We see how immigration is affecting because all those immigrants that were here, a lot of them are gone. All that easy, cheap labor is also gone. And then we know Trump is going to be pushing regulation and deregulation. So he makes the path for this fourth industrial revolution a whole lot easier. And that's the reason why the Fed is going to be late on purpose so this legacy market falls and the rise of the machines and these digital assets can rise. And remember, the crypto teacher told you because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
A significant source of inflationary pressure. This morning's jobs report showed the unemployment rate at 4.2% in March, still in the low range where it has held since early last year. Over the first quarter, to the other leg of our dual mandate, inflation has declined sharply from its pandemic highs of mid-2022. It has done so without the kind of painful rise in unemployment that has often accompanied periods of tight monetary policy that are needed to reduce inflation. More recently, progress toward our 2% inflation objective has slowed. Total PCE prices rose 2.5% over the 12 months ending in February. Core PCE prices, which exclude the volatile food and energy categories, rose 2.8%. Looking ahead, higher tariffs will be working their way through our economy and are likely to raise inflation in coming quarters. Reflecting this, both survey and market-based measures of near-term inflation expectations have moved up. By most measures, longer-term inflation expectations, those beyond just the next few years, remain well anchored and consistent with our 2% inflation goal. We remain committed to returning inflation sustainably to our 2% objective. Turning to monetary policy, we face a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. Our monetary policy stance is well positioned to deal with the risks and uncertainties we face as we gain a better understanding of the policy changes and their likely effects on the economy. It is not our role to comment on those policies. Rather, we make an assessment of their likely effects, observe the behavior of the economy, and set monetary policy in a way that best achieves our dual mandate goals. We have stressed that it will be very difficult to assess the likely economic effects of higher tariffs until there is greater certainty about the details, such as what will be tariffed, at what level, and for what duration, and the extent of any retaliation from our trading partners. While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent. Avoiding that outcome would depend on keeping longer-term inflation expectations well anchored, on the size of the effects, and on how long it takes for them to pass through fully to prices. Our obligation is to keep longer-term inflation expectations well anchored, and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. We'll continue to carefully monitor the incoming data, the evolving outlook, and the balance of risks. We're well positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be the appropriate path for monetary policy. We understand the benefits of a solid economy where workers can find jobs and inflation is low and predictable. We also understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. That is why we at the Fed will continue to do everything we can to achieve our maximum employment and price stability goals. Going to a different economy, and we're going to be learning more about that as we go, but clearly we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, well, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. We will, and if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and you know, when the dealers have to step in to save a treasury auction, that's a rare occurrence.
Cryptoteacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Tam save the village. Part 2. King Joshua and Drama Tam save New York from COVID-33. Part 3. King Joshua and Drama Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.